Imagine this, you own hundreds of rental properties, you've never met a single tenant, you've never gotten a call about a broken water pipe, you've never painted a wall, never fixed a leaking roof, but every single month, money flows into your bank account automatically. I know it sounds like a fantasy, right? But it's not. This is exactly what a REIT does, and today I'm breaking down in plain English, no jargon, no MBA required. Just the truth about how everyday people are building real estate wealth without ever buying a single house. You know, I used to think real estate investing meant buying houses, fixing them up, dealing with some shady contractors, and chasing tenants for rent until I heard this one sentence from my mentor. And he said that rich people don't flip houses, they buy the systems. And that caught my attention. So I started researching on how wealthy invest in real estate without the headaches. And that's when I discovered REITs. So I started with $100 and watched my portfolio grow over time. The dividends were paid on time, the income was reinvested, and the stress levels were non-existent. And in this video, I want to show you what I've learned so you can avoid the same mistakes that I've made and start investing smarter from day one. Alright, so what exactly is a REIT? It simply stands for Real Estate Investment Trust, but here's the simplest way to think of it. Imagine a giant apartment complex. It could be a shopping mall, a hospital, an Amazon warehouse, or a FedEx fulfillment center. Now, imagine thousands of people pooling their money together to buy that building. Each one of them owns a tiny slice, and every single month they split the rent checks. That's a REIT. In other words, it's a company that owns income-producing real estate, and legally, they must pay 90% of its profits back to the shareholders, that's you, in form of dividends. That's why REITs are income machines, and they exist to pass the profits to you. Now, let's talk about types of REITs. There are three major kinds of REITs. Number one, we have equity REITs. These own the actual properties. Think of shopping centers, self-storage units, and senior living communities. Number two, we have mortgage REITs, or popularly known as MREITs. These don't own any buildings, but they finance them. They are riskier, they have higher dividend yield, but more volatile and sensitive to interest rates. Number three, we have hybrid REITs. These do both. Now, within those buckets, you've got all kinds of sectors. You have data centers where the internet lives, you have healthcare, hospitals, and senior living communities. You have industrial like Amazon warehouses, you have retail, residential, office, and even farmland. You're not just investing in real estate, you're choosing which part of the economy do you want to collect rent from. Now let's look at a real world example, Realty Income, ticker symbol O. This is called the monthly dividend company because it pays investors every 30 days like a clockwork. They own about 13,000 properties across the United States. Think about companies like Walgreens, Dollar General stores, convenience stores like 7-Eleven, gyms, all over the United States. Each tenant signs a long-term lease, and every time they pay rent, a piece of that rent goes to the shareholders. This company has a market cap of $50 billion, dividend yield of almost 6%, with a net profit margin of 18%. Right now, Realty Income is paying about 27 cents per share every month. So if you own about 100 shares, you're getting about $27 a month in dividends. Now, let's multiply that by 12 months. Your total income is $324 in passive income. Now, let's take this a step further. If you own 1,000 shares, your monthly dividend will jump to around $270 a month. Multiply that by 12 months, and that's about $3,240 a year in passive income for just owning the stock and letting time do its thing. And this is where things start to get exciting, because if you reinvest those dividends and let them compound, that's when real wealth starts building. Remember when Albert Einstein said that compound interest is the eighth wonder of the world? He who understands it, earns it, and he who doesn't, pays it. That's what I mean by passive income on autopilot. So here's why REITs matter. You don't need $100,000 to start. You don't need a bank loan. You don't need to fix toilets. You just need to understand the game. And now you do. In the next video, I'm going to show you something most people never think about. Should you buy REITs or buy physical rental properties? We will look into the real math, the stress levels, and the path to wealth. And spoiler alert, the answer might shock you. So hit that like button if you're learning something new, and subscribe if you are ready to take your investing journey to the next level. And make sure to watch my other videos about investing.